on Workers' Day in 1998, then President Nelson Mandela said, workers are the economic heart of our society. It is they who mine the minerals and produce the exports that fuel our growth. It is they who put the food on our tables and build the facilities that deliver the services our people need. I want to say that in the COVID period, we've been reminded of that, as doctors and nurses have played an incredible role in helping our country navigate the most severe pandemic of our generation. South African workers have made face masks and ventilators, and they fill the oxygen tanks that are used in hospitals. And right now, they are filling vials with vaccines at the factory in South Africa for the J&J vaccine. More recently, we've seen firefighters come to the rescue of one of our largest cities, saving homes and even our oldest university from the flames coming from Table Mountain. And they help to save books that contain the priceless knowledge of many generations of thinkers and of communities. So the workers of this country have clearly steered through many challenges and have laid the seeds of our prosperity. That partnership at the workplace between managers and workers is what produces all the goods that all of us rely on every day. The worker ownership schemes that we talk about cover so many different parts of the economy. We've just put a small sample here together, but perhaps later we can provide a little bit more of that information. It's my great pleasure to have today with us an excellent panel of senior representatives from firms and trade unions that have been on the forefront of implementing worker ownership schemes in South Africa. And I look forward to them sharing some of their experience and responding to some of the questions that members of the media has. As we celebrate our 27th May Day as a democratic nation, it's appropriate to engage with you today on this next frontier of broad-based empowerment, namely worker empowerment. And so I would like to introduce each of our panelists, tell you a little bit of their connection to worker ownership, and ask them within 3 or so minutes, perhaps, just to make some introductory remarks and to be ready for making additional remarks when we hand over to members of the media. And first, I'd like to welcome very warmly Nozi Ngobo, a director of Coca-Cola Beverages South Africa. And Coca-Cola has built the continent's largest bottling operation through the merger of 3 large separate bottlers a number of years ago. And as part of that transaction, there were a range of measures that the company committed to undertake. One of it was to ensure broad-based empowerment. The company came back to us last year with a proposition to strengthen the transformation element. And through the discussions, we agreed on a worker ownership arrangement that must be one of the most significant ones in the country, with some 15% of equity that will be held by workers. So, Nozi, the company Coca-Cola is a global player. It's made this very important announcement in South Africa. And what value does Coca-Cola think that worker ownership brings to the firm? Did it only do it because it's an outcome of a discussion with government, or does it also see some real value in the economy? Over to you, Nozi.
Minister, thank you so much for the introduction. Good morning to you. Good morning to the members from the DCIC, the members in the panel, as well as the members from the media. Certainly, Minister, we see South Africa as an integral part, we see our business as an integral part of the South African economy, and we fully embrace the spirit of transformation. And as you've mentioned, Minister, to that end, we have introduced the employee share scheme back in 2020 last year, where there was a direct economic participation of employees of 5%. And we have increased this by 10% to now at 10%. So, sorry, Minister, 15%. We are truly encouraged by the support from the unions, the support from the ministry, the support from the Competition Commission, which has allowed us to increase this participation. And this benefits about 7,800 employees, Minister, and every beneficiary receives an equal allocation of participation. And this is established through a trust, and all the employees are qualifying irrespective of race, of management level, disability, or years of service. This has also allowed us to reach high levels of BEE levels. We are currently sitting at level 2, and once this is concluded, as you know, Minister, we have to do the paperwork. We hope to reach level 1. We see this as a landmark transaction, and we truly believe that value will be created for all participants. As with most schemes, it's vendor funded, so there is no money expected from the participant themselves. Phase 1, where it was 5%, was very well received, and we expect phase 2, Minister, to be equally successful. At a personal level, I'm very humbled to be part of an organization that is actively making such a significant impact on broad-based transformation in our economy. On behalf of South Africa, of CCBSA, I would like to thank the unions for their support, as well as you, Minister, the DTIC, as well as the competition authorities for the constructive and positive engagement held thus far in this regard. We look forward to phase 2 and how it's going to benefit all the participants. Thank you, Minister.
Thank you. Thank you very much, Nozi. I next would like to warmly welcome and introduce Tertius Carstens, who is the new CEO of PepsiCo Sub-Saharan Africa. And Tertius now heads a firm that is a merger that combined the Simba Chips group of companies that was part of PepsiCo with one of South Africa's food giants, Pioneer Foods, to create a very significant company. So, Tertius, welcome. This is, of course, a new experience for the company to have an integrated firm of the size here in Sub-Saharan Africa. PepsiCo is a global player. When they came down to talk to us about the merger, they recognized that they needed to achieve BE ownership targets. But they were very keen in the discussions with us to do so through worker ownership arrangements. From your vantage points, what is the value for a global company and for a significant player now in the South African economy and in the African economy of the worker model of ownership? Over to you, Tertius.
Thank you, Honourable Minister. Good morning to the rest of the panelists and the representatives of media. To be honest with you, Minister, we truly believe that employee owners, over and above the financial contribution that they stand to receive, as well as the transformational impact thereof, helps to foster a culture of stewardship and strategic alignment. So that is the intent of the commitment PepsiCo has made. Just very briefly also, as you mentioned, both the Simba business, the brands associated with it, Pioneer Foods with its White Star, Sasco, Liquid Fruit and other brands are well-entrenched businesses, and you would find these products consumed by most people in South Africa. So therefore we know that we stand to be responsible in our position as a corporate citizen. So very, very briefly then, our commitment to the broad socio-economic imperatives is an investment of 1.665 billion rand in an employee ownership scheme, as well as an additional 600 million development fund that will be focused on the education, enterprise development, as well as development in agriculture in South Africa, given that our business is steeped in agricultural value addition through the procurement of more than 1.5 million tons of local wheat, raisins, maize, and potatoes specifically. Now, this ownership scheme will stand as such. The South African-based employees will be issued with unencumbered, and that's a novel and important point. There's value from day one. There's no debt involved. These participants will have unencumbered units in a workers' trust that will own shares in PepsiCo Inc., listed on the Nasdaq stock exchange in the US. Now, after the initial period, the trust will use the proceeds from the sale of these PepsiCo shares to acquire up to, as you pointed out, 13% in the local Pioneer Foods entity. But over and above this, the participants will, from day one, receive 50% of the annual dividends, with the 50% remaining being reinvested in the trust to ensure real pay. Extremely pleased that from day one, our employees, the 12,500 that you also refer to, will receive financial contribution from the business and will be stakeholders and owners in this business from day one across the country. Now, our three largest unions by representation, FAVU, AFATWU, and SECAVU, as well as non-unionized employees, has worked very productively together with ourselves whilst we're busy finalizing the details of this scheme. We plan to launch in September this year. And to be noted as well as that most of the trustees managing the trust will be appointed by employees of the business and participants in the scheme. And also one of the trustees of the scheme will be appointed as a non-executive director on the board of the Pioneer Foods entity going forward. So that captures, in essence, what we aim to deliver by September this year. Thank you, Minister.
Thank you, Tish. I mean, really groundbreaking stuff there. Next, I'd like to warmly welcome Jonathan Mulapo, who is the CEO of Astron. And this is a business that was previously owned by Chevron, and they sold the Caltex refinery and the service station networks to Glencore as the controlling shareholder. And in the process of doing all of that, part of the agreement was on broad-based empowerment. Jonathan, you've done quite a bit of work on this area, and I think you also have some good news for workers in the company. Let me give over to you. And you'll just have to unmute. You know, good news must always be said without muting buttons being on.
Thank you, Minister, Deputy Minister, also my colleagues that are on the panel, and the members of the media. I think we have a bit of a long story. We started off with the Liquid Fuels Charter that was signed in 2000 with the Department of Energy at the time. And at that time, obviously, transformation was key, and so was the ownership aspects of it. So the ownership aspects, a number of the companies started doing transactions, including Chevron. And at the time, the first one was to do 23% went to the black company, and then the other 2% went to staff. And this was, I think, the first time that the staff had actually benefited from the upside of such a transaction. The rules are very simple, and they still are. Basically, the dividends are paid depending on company performance, which is normal. All the employees qualify. You know, you must be there for at least 1 year, and you must be employed by us by the time that we pay out the dividend. What you said earlier in terms of the other opportunity happened in 2018, where Chevron sold their 75% to Glencore, and Glencore came in. And I think with DTIC, one of the conditions that we had was to increase the shareholding from 2% to 5%. And we saw that as an opportunity because we wanted to get more participation. And I'm glad to announce that the timing couldn't be any better, because on Monday, everything got approved. The paperwork has been done. So as we speak today, the staff through trust are at 5%. So thank you for the great timing. Once again, I think by going to 5%, it makes it a bit more tangible, more substantial, I would say. And obviously, it ensures that we have more and more alignment between the employees, the management, and obviously the shareholders. In terms of overall transformation and shareholding, we see us going forward where Glencore will come down to 65%, sorry. The workers at 5%, and then the BE companies have option to go up to 30%. So I think that's quite positive. So thank you very much, Minister.
I hope the workers at the Astron businesses are watching this live stream, Jonathan. But thank you. Next, it's my pleasure to welcome Richard Ribbert-Karnak, who's the Vice President of Finance for AB InBev. Richard, your company acquired the assets of SAB Miller, as it was at the time, and built this significant merged company that's the world's biggest brewer today. And in the transaction that gave the green light for this transaction globally, in the conditions that applied to the transaction globally, the company committed also to empowerment in South Africa. So we've had a long history in this through SAB, but now the new company, AB InBev, has also been working on refining and strengthening these arrangements. And they're about the strategic alignment between workers and owners in building strong and dynamic firms in our economy. What are your reflections and your experience on this? Richard, over to you.
Thank you, Minister, and thank you to the panelists and the media. So I think the reflections to start are AB InBev was fortunate in that they bought SAB Miller. SAB Miller had put an empowerment scheme in place in 2010. It was at the time quite a revolutionary new scheme in that it empowered not only our staff but also created a vehicle for our retailers to participate in the growth of the company. So at the time, SAB owned a big part of the Coke business. So it was approximately 13,000 employees, almost 40,000 retailers were empowered, as well as creating a foundation, a broad-based foundation, which has done some amazing work. So that groundwork was done by SAB in 2010, long before the transaction. And fortunately, was a very, very successful deal. The deal comes to a close very shortly in the next month, but a large part of the payout was in fact made last year. The total benefit for all of the beneficiaries is approximately 10 billion rand. So the most successful deal, BE deal, certainly in the FMCG sector in South Africa, and something we are enormously proud of, right? And the learnings there was this alignment through empowerment is crucial, right? We had huge engagement from our staff and from our retailers with regard to their ownership of the shares in SAB and the growth of the value of those shares over time. And so as we look to our next scheme, we're looking to launch a new scheme again in the next couple of months. We will be doing a new employee share option plan to the value of 2.4 billion rand. The employees will own shares that have been vendor funded, 55% vendor funded in AB InBev globally, so in the group company. And the vehicle, along with the retailer contribution, should they choose to reinvest, which we believe they will result in a 5.4 billion rand new scheme being listed on the empowerment segment of the JSE. So you talked about longevity. What that does give us is longevity. It gives us an evergreen scheme, which we really like, but it also gives us transparency and clarity as to the value of what people are building. And you spoke of some of the learnings, I think, from the previous scheme was it at times was difficult to explain what value was being generated because the ownership was in a private company that didn't have a reference share price. And we really like the fact that the JSE listing will not only provide liquidity for the beneficiaries a lot earlier than was provided in the previous scheme, but also complete transparency as to the success or not of the business. So complete alignment in terms of growing the value of the business and clarity as to if that is or isn't happening. And so we're very excited about the new scheme. We think, as a business, one of our key principles is we're a company of owners. So to give all of our share employees, so all 5,500 employees, a portion of our company as real owners is very exciting for us, and everyone is looking forward to hopefully another successful transaction which will create as much wealth and alignment as the previous one did.
Thank you very much, Richard. Next, I'd like.
We're coming out of the briefing. Trade and Industry Minister Ebrahim Patel hosting a virtual engagement with different employers ahead of International Workers' Day tomorrow. The focus, broad-based transformation, of which he says is of critical importance for South Africa to reignite the economy and address past challenges. You heard the different participants giving updates about shareholding schemes to empower their particular staff. On to